Would you like to know how the DeMarker indicator helps traders determine the perfect moment to enter or exit the market? And how the correct interpretation of the DeMarker indicator readings save you from losing deals? The main secrets of the DeMarker indicator coming right up. Hello everyone, my name is Victoria. I'm a professional trader with more than 5 years of experience in foreign exchange market. I'm glad to welcome you to my YouTube channel. If you watch my videos, you will be able to trade and earn money from the start. Trading is actually easy if you know how to do it correctly. Today I will introduce you to an indicator that will significantly facilitate your trading and help you make more important decisions in deals. Watch closely, listen sharply, and let's get down to business. So today we will talk about the DeMarker indicator. It is a very effective tool for traders who intend to improve the ratio of profitable and unprofitable deals. The main advantage of such an oscillator is the ability to determine the direction of a trend movement or its change. The oscillator is named after Thomas DeMarker, who is known to all progressive traders as the author of books on technical analysis. The indicator itself is a great tool for identifying incorrect assessment of a trading instrument on the market. At the same time, it does not have negative aspects typical for standard oscillators. The DeMarker indicator identifies potential market extremums. In order to use profits of this brilliant invention, you don't actually need to calculate all the parameters yourself using some complex formula. You just need to correctly interpret its data. As in any oscillator, the numbers are calculated and built within the range from 0 to 1 or to 100%. According to the description of the DeMarker indicator, it is worth paying more attention to the lines 0.3 and 0.7. When the graph crosses 0.3 from top to bottom, the trading instrument is in the oversold zone. When the oscillator chart crosses the line 0.7 from bottom to the top, the price is in its overbought zone. In both cases, there is a high probability of changing the trend movement, since the real value of the trading instrument is underestimated or overestimated, respectively. An evident effect of using the DeMarker oscillator is noted on those currency pairs that are known for strong trend movement. That means that the tool allows you to enter the market along the trend line. But with a sideways movement, DeMarker is pretty much useless, since it gives numerous false signals. It is worth noting that the developer of this trading tool does not recommend using the oscillator to enter a trend reversal. It was created exclusively as a trend tool. However, this does not stop traders from using it specifically to catch a reversal in order to enter the market at the very beginning of an impulse. Since the oscillator allows you to determine the overbought and oversold zones, its standard settings already include 0.3 and 0.7 lines. At the time of using the oscillator, when the price drops below 0.3, a reversal is likely to happen, since the chart has moved into the oversold zone. Accordingly, the probability of a trend change is high when the graph is located above the 0.7 line. This means that the currencies are in the overbought range. At the same time, the indicator has no implementation, since the trading is carried out according to the trend. The developer of the indicator recommends that we apply a trading strategy for the DeMarker indicator only when the oscillator leaves the specific zones. We enter a short position when the indicator crosses the 0.7 level, the graph leaves the overbought zone. We enter a long position when the chart crosses the 0.3 line and leaves the oversold zone. Divergence and convergence. When the indicator and price charts diverge, this means that divergence or convergence on the oscillator is considered the basic option for practical use of the DeMarker indicator in trading. There are different types of divergence and convergence on the charts, which generate a signal to enter a trade. Divergence is a discrepancy between the direction of the DeMarker graph and a price we enter the market to buy. Convergence is noted when the price and DeMarker graph converge. We enter a short position. Levels and patterns. Oscillators, including DeMarker, are an excellent platform for searching for all kinds of technical analysis figures, also known as price action patterns. In technical analysis, the most common and well-known patterns to every trader are the pennant, flag, wedge, triangle, and of course head and shoulders. Distinguishing such patterns allows you to determine the starting point of a new trend beforehand, and in some cases even earlier than the reversal actually begins on a price chart. The interpretation of figures is similar to the same actions on a price chart, which is the basis of a winning strategy for the DeMarker indicator. Identifying patterns is not a difficult task. To do this, it is necessary to connect the maximums and minimums with one line on the DeMarker indicator chart, distinguishing the points of a trend breakout line on the price chart. The indicator also allows you to mark important support and resistance levels. Such levels work similarly to trend lines on price charts, so it is necessary to determine the points of rebounds or breakouts of such a line. As practice shows, the price chart can totally be ignored when deciding on the entry point into the market. You may only focus on the DeMarker indicator chart. By the way, in my Telegram channel, I publish deals every day so that you can find them for yourself and try to make money. Link to the channel is in description below. Practice using the DeMarker indicator. I'm going to start by selecting currency pairs above 80%. Excellent. I set the deal time for 2 minutes, and I start with the amount of $100. So the currency pair is the Lebanese pound US dollar. We see that the indicator is leaving the oversold zone, and we see a clear uptrend. Therefore, we open a deal to buy. So our first deal ends up in a loss, so we'll just need to cover that loss with the next deal. Let's see. Excellent. Currency pair Australian dollar, US dollar. We see that the DeMarker is trying to get out of the overbought zone, and this signals to us that the trend will now change to a downtrend. An excellent deal brings us a profit of $360. So I changed the deal amount to $100, and I opened the next currency pair, which is US dollar Colombian peso, for 2 minutes. We see that DeMarker is trying to get out of the oversold zone, thus the trend will now change. It is already changing, as you can see here. The trend has changed. Excellent. The deal brings profit plus $180. So to summarize, 2 out of 3 deals were profitable. This is a pretty good result. But remember that using only one indicator still retains the risks that you can, as you have seen today, have losses. Despite its numerous advantages, the DeMarker indicator is not without its flaws, since it is still an oscillator. Therefore, it has a significant drawback. It can sometimes give false signals during a trend. However, the indicator remains effective and valid, especially since you can always enhance the strategy with several more indicators. To filter out false signals, you simply need to use other methods that help determine market trends. The oscillator has a high and solid reputation among traders and is an integral part of many trading systems and strategies. If you enjoyed this video, don't forget to subscribe to the channel so you don't miss out on new useful videos on trading. Like this video and I'll see you in the next one. Bye!